Hello everyone, welcome to Bald Guy Money. And last week I came on here to say something that was unpopular to some people, and that message was do not rush out and buy gold on the weekend at an all-time high weekly close, because a lot of the Middle East issues we were seeing at the time were already priced into the market. And I added that each and every person who watches my videos should look for buying opportunities after the Fed's interest rate announcement, which we got on Wednesday, as well as at the end of the month. And with the Fed signaling that it wants to play it patient this past Wednesday because they have no political incentive to cut rates anymore, we saw exactly what I had expected, which was a modest pullback for gold and silver with a small bounce for the US dollar. And what you may find most interesting is, of these three things shown on the screen right now, gold last week pulled back the most as the risk premium we saw added to gold price on June 13th, while things escalated between Israel and Iran, was priced out early in the week. But a lot of things have changed since then. In fact, a lot of things have changed since I went to bed last night. So in this video, I want to talk about it all, starting with if I think you should still wait to buy gold and silver, and I will talk about some things that are driving the market right now. Once that's covered, I want to tell you why I think you need to pick a side when it comes to gold and silver, and I'm going to explain what that means in this video. Then we'll talk about when the best time to sell your gold and silver is, if that's something you're planning to do. And that will also include some talk about selling mining stocks if you're holding mining stocks. And we're going to finish this video with a short clarification of my position on gold revaluation, especially for my viewers in Australia, as a YouTube channel there got it a little wrong when they were talking about me this past week, and I want to set the record straight. Now, just before we dive in, please remember to visit summitmetals.com if you want to buy gold and silver from a dealer you can trust, including my picks of the week for those of you looking to buy this recent pullback, which are the Silver Walking Liberty rounds and the 10th ounce Australian gold Kangaroos. I think you can't go wrong with these products. And if it's your first time ordering from Summit Metals, remember to claim your 5 ounces of silver at spot, and I will leave the link to these deals in the video description below. So, to begin, uncertainty arising from global conflicts and other geopolitical issues, such as the weaponization of the US dollar, have undoubtedly been driving the price of gold up, in part since it bottomed in 2022. And as gold has led, silver has faithfully followed. But something we shouldn't forget is the large impact that rising interest rates around the world had on the performance of gold and silver even after the outbreak of the Russia-Ukraine war, with prices pulling back significantly only a couple months after it started. And what I want to say here is, yes, conflicts impact metals prices because uncertainty sends people to gold. But we shouldn't underestimate the oversized impact central bank interest rate policy has on metals prices, which, since central banks around the world, including the Federal Reserve, started lowering their target interest rates in 2024, metals prices have taken off as expected. Now, considering something I showed you all a couple weeks ago, which is where the market expects interest rates to go by the end of next year, so 2026, and this is an updated chart of the CME FedWatch tool expectations prognosis, it tells us that we still have a long way to go when it comes to lower interest rates, which means central bank policy as it stands today, moving at least 18 months into the future, is only going to act as support for gold and silver prices, with little chance of stopping accelerated moves up, especially when new developments arise that are not priced into the market. And a perfect example of that is the United States directly bombing Iran last night. And this is a new development that is not priced into the market, unlike the missile exchange we saw last week that I pointed out to you all was at least partially priced into the market back in October 2024 when Israel and Iran exchanged missiles for the first time. So coming back to this projection, which I showed you all last week, this price target with gold above $3,500 an ounce is in play now. And unless the United States backs off of Iran in a big way, I think this is something we are going to see by July 4th. And for those of you wondering, I bought the pullback in gold this week, and with markets closed right now, I think it's a good opportunity not to go all in, but to DCA before markets react to this. Because not only does US involvement need to be priced into gold right now, a wider involvement there would also need to be priced into US national debt projections, because whether you agree with fighting in Iran or not is irrelevant. The fact is, it will cost money, and that money will either be printed or borrowed into existence. And considering how overpriced the stock market is right now, paired with the potential of a new war in the Middle East, I can't help but draw parallels to what we're seeing today with what happened between 2000 and 2012, when we saw two major stock market crashes along with two wars in the Middle East, Iraq and Afghanistan, which created an environment where gold and silver flourished as stocks languished. And I can't help but suspect we may be in for a few years of this, especially if this Iran situation turns into a full-blown ground operation. And this is precisely why I say at some point you have to pick a side with gold and silver. And it's why I came up with the concept of Schrodinger's gold and silver. And it's based on the idea of Schrodinger's cat, which is a concept that goes like this. Imagine a cat in a box. You can't see inside the box, and there's a chance that the cat is alive, and there's a chance that the cat's dead. And until you open the box and look inside, it's like the cat is both alive and dead at the same time. Then, once you look inside the box, you find out which one it is. Now, a lot of people out there say the exact same thing about gold and silver, that it's both dead and alive at the same time. And they're saying this whether they're conscious of it or not. And what I mean by that is they admit that gold and silver are going much higher, but they always insist that between then and now there is going to be a huge crash, and that is when they are going to buy. And they use this as an excuse not to take any action, because they're always waiting for gold and silver to be just a little bit lower before buying. Kind of like when we saw gold hit a period of sideways action from April to July 2024 around the $2,400 an ounce level, and many people, including my viewers, I saw it in the comments section, were calling for $3,000 gold, but insisted it would crash below $2,000 an ounce first, and that's when they were going to buy. And as you would have it, we're further away today from $2,400 an ounce than we were from $2,000 an ounce back then when gold was at $2,400 an ounce. And the lesson of this story is the cat in Schrodinger's box is either dead or alive. And gold and silver are either going to be much higher a year, 2 years, 10 years from now, or they aren't. And if you're on the side that they are going to be much higher, then you're wasting good opportunities to position yourself for that today, especially when we've already seen silver volatility on pullbacks in the market to be much lower than that of stocks, and gold acting as a safe haven while central banks of the world and even some large investors move away from the US dollar. So ultimately, the choice is yours, but I think the body of work I have presented over the last 2 years, which has been backed up by fantastic performance of both gold and silver, by the way, supports my case, and it's why, as it says in the thumbnail, I am taking action now instead of waiting. Now, moving on to this week's viewer question, and remember, if you'd like to see me answer one of your questions in a future video, please don't be shy and submit it in the comments section below. I read all the comments, and I pick one question to appear in every video I do. And this week's question comes from XRP Vegas. This guy must love gambling, I can tell by the name. And the question is, when do I sell? And I am going to assume this person is referring to gold, silver, and I will even throw in mining stocks in there for good measure. And I'll answer this question first by saying how I approach this. Then I'll cover the signals I look for to identify tops and bottoms in the prices of precious metals. So when it comes to my physical metal stack, a very modest portion of which I have sitting right next to me here on the desk, that is an insurance policy for me, and I will not sell it unless I absolutely need to. I will take it with me into old age, possibly to the grave, if I don't sell it off bit by bit to supplement my expenses when I'm no longer working. So that's my position on physical metals. But my mining stocks, which is a trade I am making based on my conviction that metals prices will go up over the short and midterm, and is a trade that I entered, by the way, in July 2023, will be sold much sooner than that. And I will sell them when we get close to the top of the market for precious metals. So the question is, how do I know when we get there? Well, for silver, the indicator I look for is a crash in the gold to silver ratio. And for those of you unfamiliar with what that is, the gold to silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. It's as simple as that. And what we notice when it comes to the relationship between silver price and the gold to silver ratio is that when there is a spike in the ratio, we are likely close to the bottom in the price for silver. And when there is a rapid drop in the gold to silver ratio, so the price of silver increases much faster relative to the price of gold, that is a sign that we are close to a top in the price of silver. So, although I won't be selling any of my physical silver when this happens, I will start selling my silver miners when the GSR gets around 70, and I will be selling into its decline from that level. So, for those of you looking to unload physical silver, that should also give you an indication of when I think is a good time to do it. Although I really think holding on to it for your life and having it as a base protection insurance policy is really the best thing. So let me be perfectly clear with my stance on that. But if you absolutely insist on selling some of your physical silver, look, I'm not going to beat around the bush when it comes to answering these questions. And I want to give you all some information that can be useful for you when it comes time to cross that bridge. And for those of you who are unsure if silver is going higher from here, from where we are right now, I do want to point out one thing, and I'd say that a persistently high GSR with no real significant correction, like what we are seeing right now, based on these signals that I'm presenting right now that are triggers for selling silver, or in my case, only the silver miners that I hold, this persistently high gold to silver ratio is a very strong indication still today that both gold and silver still have a long way up to go before reaching the top. And that's just another indicator on top of what I've already discussed in this video that I really want to point out to you all. Now, when it comes to gold, which once again, I'm not going to be selling any physical gold. I want to be perfectly clear on that. I'm going to continue to hold it. And as I said, maybe sell it off bit by bit to supplement my expenses should I need to in my old age. But I have some gold miners that I will be selling, and I will be selling them once the gold to silver ratio starts to rebound after the crash, meaning I will sell the silver miners first, followed by the gold miners a few months later. Now, that is my approach, and my targets of $3,750 per ounce gold and $60 per ounce silver in 2026 are well known, so keep that in mind when planning your exit from metals or miners. But if you're looking for a second opinion, I spoke with a person that I have really huge respect for this week, and that is Don Durrett. Maybe some of you know him, maybe some of you are not familiar with Don, but Don is an encyclopedia when it comes to precious metals and mining stocks. But overall, he's a very interesting guy when it comes to investing. So before I show you this clip, please be sure to follow him on X and check out his website, goldstockdata.com. But this is what Don said about selling metals and mining stocks in the interview that I did with him this week that featured on X. The base set of miners that I purchased back in July 2023 are up almost 100% now today since when I bought them. My question to you is, and kind of building on what you said with respect to there could still be a 20, 25, possibly even 30% correction. Do you think it's time for people like me who have been in since that summer of 2023 to start taking profits, especially when you factor in risks like higher oil prices due to the conflict that's brewing in the Middle East right now? Or do you think that it's just best to scale up if that happens and hold on tight?
Don't sell anything before $4,500 gold. But I will have one caveat with that. Some people like to do a strategy. If you're up 100%, sell half, and you're only riding on the profits. And I'm okay with that strategy. Sell half. But if you there is such a thing as a bad sell. People say profit is always smart. Well, it's not always smart. I mean, look at the guy that bought two pizzas for 10,000 Bitcoins. That wasn't a smart sell. That wasn't smart at all. I think that's a good
Not at all.
analogy. So if people are taking profits at $40 silver, they're way, way, way too early selling. And people will. I mean, these stocks will go up 100%. If silver goes to 40, a lot of these stocks they'll be up 100% on their silver miners. And a lot of people are going to take profits, and it's not smart. Wait till $4,500 gold and then check and see what the silver price is. I always say, remember I said gold leads, right? So you can ignore the silver price completely and just wait for $4,500 gold. And we get to $4,500 gold, check and see what the silver price is.
So, XRP Vegas, I hope that answers your question. And to everybody else watching out there who has had the same question to me that XRP Vegas had, I hope that my answer is clear and that by including what Don said in this video adds an additional, let's say, dimension to what I'm saying, an additional consideration to how you might approach an exit, whether it's from precious metals or from mining stocks. And before I carry on to the gold revaluation topic, if you want to see more of my discussion with Don, which I highly recommend checking out, you can see that on my X profile. There are two really nice videos there where Don and I touch on different topics. So please go to my X profile, make sure you're following me, and check out those videos there. Now, to finish this video, I just want to clarify something that was mentioned on another YouTube channel this week in a conversation with Mr. Alistair McLeod, who I am a big fan of, by the way, and I reached out to him and he was very kind. He apologized to me for participating in this misunderstanding. But what I want to say is these two guys here from an Australian gold company made a post saying, I predicted a gold reset that will send gold to $141,000 an ounce. Now, to those of you who watched my video from a couple weeks ago on the topic of gold revaluation, you'll know that I never said such a thing. And what I said was that such a revaluation of gold up to fully back US debt, one that many people in the community like to talk about, by the way, would do more to end the US dollar as a currency, making it completely worthless, than it would to make gold price reflect a real current value of $141,000 per ounce, with my projections of what would really happen as a consequence of an exodus from the US dollar in these figures here on the screen right now. So please, for those of you who saw that video, be skeptical about what you hear and what people say. Some people, I suspect, like As Good as Gold Australia, and again, this is just a suspicion of mine, are more interested in getting clicks and making sales than they are in offering anything of value or substance to the people they claim to be serving. But I can assure you when it comes to this channel, that is not the case. I am not about FOMO. I am not about sensation or dishonest framing of data. And although I am bullish on gold and silver, extremely bullish on gold and silver, my expectations remain firmly grounded in reality. So with that said, that's it for this video. I want to thank everybody who has watched this entire video very much for making it all the way through. I want to encourage anybody who has questions for me to leave them in the comments section below. And if you enjoyed this video, please remember to leave a like, make some noise for the algorithm, and let YouTube know that you think more people should be seeing content like this. And until the next time we see each other, everybody, as I say at the end of all of my videos, please remember to take care of yourselves and take care of each other. I'll see you in the next one. Goodbye.